Hello, this is Michael Beatman with your Gateway FS Weekly Wrap-Up for Friday, April 3rd. We had a rough week on the Chicago Board of Trade. May corn ended the week down 15 and a quarter cents. May beans were down 27 and a quarter cent. And May wheat was off 22 cents for the week. Partially due to the numbers that you're seeing on the screen. This is the USDA prospective planning. On the corn side, the 97 million acres. That's going to be the biggest number that the USDA has put out since 2012, whenever they put slightly over 97 million acres of corn planted. Beans came in a little bit underneath analysts' expectations. You can see about 1.3 million acres less than what analysts anticipated. But beans did not respond well to, the market didn't respond well to these numbers. It was just neutral on the day. Beans were. Switching more locally, the state of Illinois is projected to plant about 800,000 more acres of corn, or 8% over what they did last year. Missouri guys are projected to plant 400,000 more acres than last year, which is a 13% increase. On the bean side, Illinois is projected to plant 550,000 more acres of beans than last year, a 6% increase. And on the bean side over in Missouri, they are projected to increase their bean acres by 700,000 or 14%. So here you see the first quarter USDA quarterly stocks report. The top line is corn, and it is a bullish number, but that was kind of offset by the large acres number that the USDA report put out. So it was a wash, and as I say, on Tuesday, everything was fairly neutral. It was just throughout the week that all markets trended lower. Some things that are weighing on the corn market, or at least the main thing, is oil. Oil prices have collapsed, and that's affecting ethanol demand, affecting ethanol plants. Some are having to close up short term. And then what's weighing on the beans, at least in my opinion, is China hasn't shown up and bought any of our old crop beans, really, or any new crop purchases of significant mentioning. So everybody thought with the ag deal that would happen, and that has not happened. So that is also trending the markets to the downside. Something that's weighing on all markets, whether it be agriculture-related stocks or bonds, is the coronavirus. And listening to some of the medical experts out of Washington, they're saying that the worst is yet to come. So just taking that at face value, if all markets are being affected by the virus and the virus is going to get worse, then I would have to think that all markets are going to take another leg down and that the bottom's not quite in yet. So short term, I do think that we're going to head lower, and it's not necessarily anything to do with ag fundamentals. It's more just the virus. So as always, if you have any questions, please give myself, Adam Parker, or Phil Sally a call at 282-4000.